Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the slightly delayed running. My apologies. Bull versus Bear webinar here. Steve Miley on the call for trade day on what day we have? We have Wednesday the 10th of May today. So welcome everyone. Welcome, Robert. I see you there. Anyone else want to put their name in the chat? It's always nice to get some names up there. Not enough people saying hello, so I've got my soul voice up here. So say hello if you want, guys, into the chat. Just type your name, say hello, or whatever you want to do. I'm going to go through the usual regular run through in here today. Take a look at the calendar, what we've had, what we've got coming up. What are the important macroeconomic, fundamental, geopolitical events that are impacting markets right here, right now? Also, take a look at the Fed tool. We're going to take a look at the Fed tool. That's shifting around a little bit, and then we'll take a look also at the charts and see how things are impacting markets in here. So welcome, guys. Welcome, everyone. So first of all, let's take a look at. Now, I was a little bit rushed pulling all this together today, so my apologies, but just trying to see what I've got for us in here. So let's look at the calendar first of all. I'm going to actually step one step back. Yesterday, people CNBC don't drop into here very often. So morning, Robert, Allen, Jim. So John Williams spoke last night. I think this was fairly hawkish. Fed's John Williams in here. My sister site that I have, sort of sister site. We've got this Hawk versus Dove sheet. I think it's a good little resource. You know what? I need to get this up. I'll get this copied across into Trade Day as well. But I've written this anyway, so you can trust it. It's good. There you go, Steve Miley. So this is Hawk versus Dove sheet on FX Explained. Showing you where the hawks are, where the doves are in the FOMC. And you can see Williams in here, pretty much in the middle of that hawk dove sheet in here. Neither a hawk, neither a dove. So I think actually Williams' comments and, having seen what he said recently, I think these are relatively hawkish. I think this is the Fed's trying to talk them. We've been discussing a lot when we've been looking at the CME tool and the CME tool in here. If you look at the Fed, remember, this is based on the Fed funds rate. This is based on the futures market and what they're pricing in. The futures market very much pricing in going on pause. Well, the Fed's told us that. But then also looking at rate hikes, the last three meetings, September through December of this year, rate cuts at the three last meetings of the year, and the Fed telling us something very, very different, saying we're on hold. And I think the Fed are just trying to push back on that. And Williams did that yesterday. Basically, look, it will take time for FOMC action to restore balance to where the economy return inflation to our 2% target. This is the key line, though. Look, we haven't said we're done raising rates. The market's looking for him to cut. He's telling us they haven't stopped raising yet, right? So, there's definitely a different message from the Fed and what the Fed are pointing at. The Fed are probably pointing at, staying on hold for the rest of the year. The market, and they'll come to the CME tool saying something very different in here. And Williams, I think, trying to, push that. And if we look in here for the June meeting, now, only last week, even the beginning of this week, this was at 100% basically. And if there was another column, it was on the left. So this is at 500, 525. We're currently 500, 525, yeah? If there was another column, it was over here that we would get a rate cut at the June meeting. Not here now, 0.25% chance of a rate hike, okay? And if we look on the historic, so I'm going to put the 500 to 525, that's where we are now, and 525 to 450 for June, okay? If we go for historical, I just think this is an awful system. Every time I come on this, you probably hear me moan. Why don't they just have one thing where you could uncheck all the boxes? I don't know. And then you can recheck them anyway. So these are the 500 and 525. So let's just do one each at a time. The 500 to 525. Look, so we were up in here at like 90+% in here last week, and boom, this week, boom, boom. A big shift. Now that's partly to do with because there was still some fears last week regarding the regional banks. Some of those fears around the regional banks have dissipated, okay, more recently. So that means then that maybe if there's less of a chance of another leg to this crisis that started in March and then went quiet through April and has now come back in May. If there's not going to be another leg of that, so then maybe that means the Fed are a little bit more hawkish, but also, definitely from Williams' comments in here. So we've seen that. That's on the 500 to 525. And we go look at the 525 to 550. Last week we were sitting, beginning of May, sitting at 0 and now pushing back up in here. And then, through April, it did, through April, we sort of did see a chance of more chance of a hike. That it felt, and before the crisis, remember, it went from, before the crisis, we were looking at the peaking rates to be at that level, that 525 to 550. So this was like, late February, early March. And then when we got the crisis, boom, it dropped to 0, snuck up again through April, and then we're sneaking back up again. So if anything, the market is kind of listening a little bit on the very short term, but if I go back to the current in here, if we look further out from June though, July, back to 500, 525. So even if there is any chance of a rate hike, it's coming back down by July. And then by September, we're still pricing in a quarter in September, another quarter in November, and then another quarter in December. So 3 cuts the last 3 meetings, and then basically any chance of us being at 500, 525? No, not really, not above. Not even at 500. Definitely going to be a cut by, pretty much either 2 cuts or 3 cuts by year end. So the Fed are trying to talk us back. The market's kind of slowly listening, but there's still a big a chasm between them, really, and it's the resolution of that. And we may get some resolution today because obviously we've got a big event today, right? So we did get some data this morning as well. We had, if I go back to that, was yesterday. I'm just looking back a little bit. We had German inflation data. All of it look in black in here, meaning it's all exactly in line with expectations. All bang in line with expectations. Typical German efficiency, right? Bang in line with consensus. Probably not going to get that this afternoon from the US. That's not because it's the US. It's just because, I don't know how those numbers have all fallen in bang in line, but they are bang in line. So CPI, it's all about CPI. 50 minutes, helmets and goggles on. Now, I hope I'm preaching to the converted. We've sent more emails out, more in the members area, in the trading room, just scrolling heads up, I can't put it anywhere else, guys, but the last week we had 2 of what we consider tier 1 data events. We only have, look, I'll go to, if we go in here, I'll take us to where are we? As you know, I need to go to the home page. Let me go to the home page. Trade day, FAQs. Economic data. Can I trade economic data releases? There's only these, right? Unless you're trading gas, oil, or agriculturals, right? We've got basically no one trading agriculturals. Gas and oil, we do have a few people trading oil, okay? But unless you're trading gas and oil, there's only 4 events, okay? There are only 4 events. It's not like there's loads and loads of data events. And I know nearly everyone on this call. So, I've got Robert, Alan, and Jim that I know you guys are on, and there's loads more of you guys on. I know nearly everyone knows this, right? But these are only the 4 events. 2 of them are monthly. The FOMC is not even monthly. They're every 6 weeks, right? FOMC decision and the FOMC minutes, 2 minutes either side. That's a 4-minute window twice every 6 weeks. And then the US CPI data, the inflation data, arguably the biggest piece of data in the world at the moment, which moves markets. It makes markets very volatile, very, very difficult to trade, particularly if you're trading from a retail trader perspective. And the US employment report, yeah. These are the only things that you can't trade for those 4 minutes, 2 minutes either side of these events. That's the only events, right? So, and we've posted this everywhere. Please don't trade. And then we've got another one today. We've got the US CPI, right? We had 2. We happened to have 2 last week. We had 24 traders. I think it was 12 on one day, 11 on another day, and 2 funded traders as well. 2 traders who have actually funded, ignored it. And, we had to take steps, right? Okay. We can't be lenient with this stuff, guys, because we can't. If you are sitting on your limit with a live trading account and you've only got $200 in there and you go long 20 NASDAQ or something, right before the US employment report, does CPI also affect crude? I guess that's a little. Basically we're saying you can't trade. You shouldn't trade any of these for. So if you're any kind of trader, it's the top 4. That's for everyone, and then these are only for energy. and these are only for agriculturals. So yes, I mean the fact is that CPI does impact the oil market, Brandon. Right, it will impact because it's going to change what the Fed do. It changes what oil does. So not to the same extent, but basically the rule we have is you can't trade but nobody can trade over these top four, right? Because there's no. But then these ones here only if you're trading energy, and these are the only if you're trading ags. Obviously, we're not going to the top four of these four here. Okay, all right. So the FOMC minutes, the FOMC interest rate decision, the US CPI, and the US employment report. Okay. Those are those four there that I've highlighted on the screen. Yeah. Those are the only things. These are the only four things each month, and they're not even every month. The FOMC is like every 6 weeks, right? These are the only four things you have to be aware of, right? We have people complaining, I don't know which ones they are. Well, it's here, right? When you sign up, what are the permitted? Comes in when you go to what are the permitted? What can I trade? So I'm not moaning at you guys, right, guys? I'm sure you guys are aware, right? That we have. Again, we had to foul people, right? And we don't want to, I don't want the money. We're not doing it for the resets, believe me. What we don't want people to do is trading this, because we don't want you then stepping to live funded accounts and then trading. Remember, it's our money in this. It's live, real money. Not like all our competitors. You go over Apex, right? You go over Top Step, yeah. You're on their sim. You get funded. You're funded in sim. They're not real trading accounts, right? You're not aligned with them at that point. We make this point a lot. We are aligned with you. As soon as we fund you guys, that's our money. We want you to succeed. We couldn't want you more to succeed. We have calls with traders who are funded. We want them to succeed. Yeah. Because if they don't succeed, that's literally my money going down the drain. Right. That's why we're quite stringent on this stuff, because it's real money. Okay. And it's real capital, and we want traders to succeed. So then you succeed, we succeed. With our competitors, you go into the sim, if you succeed, they're writing you a check. They'd rather have you fail, right? Because a lot of the time, they're not hedging you. They're putting you in another sim waiting for you to fail, because they know that most traders go into funded and they fail again in the funded section, okay? Because it's hard. If anything, it's harder when you're funded, not easier, okay? All right, our lecture's over. I don't want it to turn into a lecture, guys, because most of you guys who are coming on are aware of the macro fundamentals. You're coming on, you're doing your due diligence, you're listening to the webinars. I appreciate you coming on the webinars, and we're trying to educate, and we're trying to get the knowledge out there to make you guys better at what you do, okay? I'm going to stop the lecture now. So anyway, it's all about CPI today. We do get crude oil inventories. Okay, so obviously through that, you can't, if you're trading oil, you have to be 2 minutes either side of the oil inventories as well. What else do we get? We have something else today, I'm sure, that was of note. Oh, no, I think we might get some further fallout. That was the other thing I wanted to talk about. So yesterday we had Biden and McCarthy still divided over debt ceiling, talks to continue, okay? Yellen's been going on and on about. I'm a little confused about why this is. I don't know whether they know something we don't know, that it's not going to get resolved in here, because the debt ceiling, I mean, particularly you guys in the US, right, you will know, right? The debt ceiling argument comes up every 1 to 2 years of increasing the debt ceiling. It's used as a political pawn. It's like a political chess piece. Whoever's not in power, I won't allow whoever is in power to increase the debt ceiling unless they get something in return. It's just a political game. It nearly always gets, sorted out. It is a bit of a concern, but I'm sure they will sort it out. I saw an interview with Bill Gross, PIMCO fame, and he was like, it's going to get sorted out, and this guy's been around, I've been around 30 years, he's been around forever. So yeah, I mean, I'm pretty sure we're okay. What else do I have? I've got a few more articles in here. So going into today, stocks muted, caution prevails before US CPI, US debt ceiling impasse remains a big concern for investors. Well, yeah, but is it really? And then what else do I have in here for you? 5 things you need to start your day. So debt ceiling saga continues without resolution. Janet Yellen pointing to June the 1st when the US might default. Frustration around Wall Street, the long-term implications of US debt will be unthinkable. Yeah, well, it's probably not going to happen then, is it? Donald Trump abuse case in here, not affecting us in the markets. And markets just fairly quiet in here this morning. We had that German data this morning. All eyes on CPI. What else do I have for you in here going into the day? Stocks are muted. Precaution prevails. So China stocks have been surging of late in here, particularly state-backed ones and state-linked companies, and particularly the financial sector. You can see in here a massive rally in here, April extending into May. But the last few sessions in here, we've had a dip back low in China stocks in here. So you can see in here, Bank Bank of China, CITIC Bank in here, Galaxy Securities. The financial sector really taking off more recently in here. It's actually, you see like a 3-4-fold increase in here, but dipping lower on some profit taking more recently, not really impacting us. This is a bigger burner, okay, a longer term burner, should I say, but it's a big issue in here. New sanctions on Russia. EU countries starting talks on that. We do have G7 finance ministers meeting from this week in Japan as well, from today. So we're watching out for that. And then, Reuters equivalent of 5 things start your day. Markets on hold for US CPI. What else do I have in here for you? Nothing really much, I think. Bank of England looking to that's tomorrow. Bank of England's tomorrow. Looking for another rate hike tomorrow from the Bank of England. Okay, let's move on to the charts. I think we've had enough going through there. So for me in here, this is kind of, even though we had a dip yesterday, we've had a further dip, we get this massive push higher. This is kind of a flagging pattern for me in here going into CPI. Natural for the market to consolidate back lower. If you think this is a this is a Marabout, because we call it a Marabuzo candlestick. A Marabuzo candlestick opens at one end, closes at the other end. So opens either on the close, opens on the low and closes on the high, or opens on the high and closes on the low. So Marabuzo there, another one over there is a bearish Marabuzo type candlestick over here, right? So these are Marabuzos, these long impulsive candlesticks, and this on the daily chart. And with a Marabuzo, in case you don't know, we measure the candlestick itself. At the halfway point is support in here. So if I go and just do like a Fibonacci retracement, you either do it on the candlestick itself, and you can see we're holding bang on the 50% retracement there. You see it? Bang on the 50% retracement is where we are. So it's holding the support it's supposed to be holding in here. And if we step into a 30-minute chart, and if you measured it from the bottom there, obviously the Marabuzo actually comes from more like here. But if I measure that from the bottom in here on the fib of the rally, take that across, you're actually holding in here. Well, it says the 61.8. It's actually around the other way. So let me just draw it. Doesn't do it the right way around, in my opinion, for Tradeovate. Believe me, I've used a lot of different systems. So it's kind of holding right at the 38.2 from the low to the high, okay? And if we then look from the Marabout from here, this is actually from yesterday's. That was actually the rally comes from. Where are we? Yeah, from here. So from here through here, you can see we're holding at the 50%. Okay, so it's either the 38.2%, the 38.2% of the whole move, and the 50% of just Friday's move in here come in pretty much the right same place, and we're sitting right above there. And then this looks like it's just like a flag pattern, right? Got this kind of flagging pattern in here. Let me just put some in here, and this probably more important line comes across here, right? So look. There up through there is more bullish, and really kind of needs to break down through the bottom of this. I'd argue the bottom of the flag comes more like it's there at the moment, right? It's like a downward channel. Okay, so I think down through sustained move below 41.24 looks more negative. We got the 61.8 and 50% gathered down here. I think 41.16 to like 13 area is really important as well. Back up through, well, you got the line there, but back up through the recent high, 41.42, 44 looks a lot more bullish. That's on the ES. Let's do the same on the Nasdaq again. Big impulsive Friday, basically hit at the beginning of the week. We hit a new multi-month high in here, flagging back down. A better little rebound in here. Look at that, using that 13-day exponential moving average has been, it's good when we're trending. Then we're going, when you go to sideways, it's not so good. But if we're thinking we can start in the next trend, we'll just bounce right off that 13-day EMA. And if we step in again and do the same kind of analysis on the ES, so the fib from the bottom to the top, in here, you'll see we just punched below the 38.2. And if we do the fib from the just Friday's move up in here, again, it's 38.2 and the 50 around the same time. It's probably these dual support. So I think 185, 180 is going to be important on the downside. On the top side, you've got the same kind of line coming down across off the top, similar line coming through here. Okay, so up above the line, really the recent highs, 13,290 looks more bullish. Okay, so there's our kind of breakout points. Obviously, you got to wait for 2 minutes either side. So either side of CPI, you're probably going to be all the way up here or down here anyway. But then, this thing can really move on CPI, guys. Remember, if we look back, actually, you're not going to bet the data going all the way back. But the previous CPI, we actually went the low. Actually, we have got it here. Look, the low back here when the low went in here and the low went in here. This was a CPI day. That was a big CPI day, that one there, I can tell you. The CPI days, more in, I think the last a couple of months, they've been less aggressive as they were at the end of last year, but they can be really big days. No reason we can't see a 2% day on the S&P, 3% on the Nasdaq. So there's plenty of time to get involved after those, either side of those 2 minutes. Okay, I would do nothing ahead of it, guys. No setting up trades before it, and then just waiting. You've only got now 38 minutes. Okay, and there's going to be fireworks, and then. Once you get the initial move, then we settle in for the cash market open, and then you usually get another move at that point there as well. Okay, so all eyes on CPI today. Good luck, helmets and goggles on. Please don't trade either side of it. We're watching, and then I'll be back with you with another bull versus bear webinar tomorrow to pick the bones out of whatever CPI has delivered. And so I'll speak to you then. Take care, stay safe, and have a great trading day. Bye.